This is Frontier Opening Bell Wednesday, the 4th of November. I am Bosun Amofai. I'm pleased to welcome my panelists to today's show. From Vertiva Research, the head of banking analysts team, Joshua Odebisi. Good morning, Joshua. It's good to see you on the program.
Good morning.
Yeah, well, thank you so much. Alikan Sachu in Nairobi at Rich Frontiers Management. Good morning, Ali.
Morning, Boston.
A very great day. Thank you so much, and welcome to the show again today. Ali Sega from Dubai, who is a risk and governance expert for North Africa.
Morning.
And the Middle East. Thank you so much, Ali Sega. Thank you so much, three of you, for being on the show this morning. Let's get the show started. A very busy day, of course. The U.S. elections, vote counting is grabbing everyone's attention, but the African equities market a bit of in the mixed. The Ivorian market went down 2.28% as the oppositions were crying foul over the last weekend election in which President Alassane Ouattara scored majority votes and is getting his third term started. The Nigerian stock market came back from a negative Monday to a positive 0.83%. Again, earnings from industrial, banks, and consumer goods, agro-allied, look largely positive. Egyptian market 0.79%. That's a very good day to start to continue the week. Tuesday, that is, Kenya market softened 0.13%, and South Africa up 1.08%. The Kenyan authorities, everybody in Kenya is looking at the latest deal between UK and the East Africa's largest economy. So that trade deal, in principle, post-Brexit with the UK, seems to be getting the rest of the East African community upset with Kenyatta's administration. A similar deal was pursued about 2 months ago between Nairobi and Washington by President Kenyatta's administration. The KRA, that's the Revenue Authority, announces a presumptive tax waiver, 24 months for new businesses getting started in the economy. And Trademark East Africa and Kenya signed 1.3 billion shillings infrastructure funds for about 4 projects. Ali, why is Nairobi upsetting everyone when it comes to this go-it-alone deal like the one signed up yesterday?
Well, the whole concept of the East African community is that if you bulk up countries, you have more leverage at the table. And, you know, the EAC has been quite, well, it's got its pros and cons. One of the pros, Barson, is that we do a lot of internal trade. One of the cons has been a lack of coordination, particularly between Dar es Salaam and Nairobi. So, look, there's a sense of disappointment amongst the East African community that Kenya's gone it alone. On the face of it, both the proposed transaction with the US, or where there was a little bit of pushback, and this one are extremely favorable towards Kenya. So I think, you know, in Kenya's case, particularly this deal with the United Kingdom, which was signaled by Boris Johnson previously, is a positive step. It solidifies markets for our vegetables, our fruits, and the UK is still a very important trading partner and probably still the biggest investor in Kenya Inc. via shareholdings and things like EABL, that's Diageo, Vodafone via Vodacom and Safaricom, and a whole bunch of other investments that it has. Also, just to touch on your IMF headline, Kenya has applied for budget support to the IMF. Most of us were expecting this, and particularly, I think if it comes through, the IMF has been supportive, and it's pretty much a geo-economic calculation. Does the IMF want to keep Kenya on side? I imagine they do, and that will probably support the shilling, which has been at a record low. Let me now go to some other headlines, because during this strange interregnum, as we all watch the US election, which I think as African analysts, we have a significant advantage, because all these scenarios have happened previously on the continent. However, we've had three things in my region which are noteworthy and very concerning. Let's start with Ethiopia. State of emergency declared by the Nobel Prize winner in Tigray. This has been coming for a while. Tigray, of course, that was the TPLF, the original folks who sat at the seat of power in Ethiopia. Abiy has been dislodging them. There's been a lot of unhappiness. He's been reaching out to Afwerki in Eritrea to try and triangulate the Tigrayans. And, this is the whole story that, will the center hold? That W.B. Yeats poem, everyone likes quoting, The Second Coming, the falcon cannot hear the falconer. And I think, we've got a very major geopolitical situation unfolding north of us in Nairobi. Tanzania, the terrorists invading from Mozambique, but they're calling all the opposition Democrats terrorists and arresting them. We had the arrest and release of Mr. Lisu after 2 hours. Zito Kabwe was arrested for visiting some of these folks. So a very turbulent situation there. And in Uganda, we had the musician turned politician Bobby Wine given his presidential papers, and then a horrendous arrest of some kind, which unfolded on social media. They broke into his car there. So it seems that under cover of the US election, with the US focused on that, there's a lot of political turbulence going on, and I think investors need to consider this level of turbulence because it's going to impact markets for sure.
Yeah. Well, thank you, Ali Khan. Let me allow Ali Sega very quickly to weigh in here on this political situation. When you look at North Africa as well, it looks like between Algeria and Tunisia, they're trying to get a handle of their own political problem, which has been there for a number of years. But now watching what's going on in the US and in East Africa, do you think the risk quotient here has been raised?
Yes, in North Africa, we can say the political risk is the main risk we have in North Africa. So between Tunisia, Morocco, Egypt, and Algeria, the political risk is really high. It has not been addressed. Just recently we had the Algerian election on the constitution. It has shown a big abstention rate. In fact, more than 80 or 70% of people did not vote for this constitutional, we can say, amendment. So the political risk is really high in all these countries. I think, with the COVID situation and with the unemployment rate, the risk is really high on all these countries.
Okay. Thank you so much, Ali Segar, as well. Let's quickly move into West Africa. I'm sure when Ali Khan was speaking about those arrests, of course, the Ivory Coast story is also on everyone's radar. A very rich agri-resource economy, the largest Francophone-speaking country in West Africa, hosting a stock exchange for about 7 or 8 other West African French-speaking economies. So whatever happens in Ivory Coast, Alassane Ouattara got a third term. Opposition largely ignored the elections, and he had a free reign. The president had a free reign to remain in office. But when we talk about Nigeria, Lagos State is warning everyone to observe protocols, COVID-19 protocols. If these are ignored, if cases rise, then Lagos may likely go into a lockdown. That warning came yesterday as businesses, schools, religious places reopened for business. But the stock market, the financial market seems to be moving on with the positive numbers from agro-allied companies like Okomo, like Presco. Yesterday evening, after trading, we got from Boa Cement, Nigeria's second largest cement maker, reporting better than expected numbers, including earnings per share. Ghana's parliament suspended to review the suspended gold royalties IPO, which Ghana initially planned for the London Stock Exchange. Total, which is a petrol market, a major one in Ivory Coast, in Cote d'Ivoire, says its net income down 45.5% in the first half of the year. Again, with the lockdown, with the virus, folks were not driving cars and vehicles and automobiles around as expected. So that perhaps flew into that Total figures in Cote d'Ivoire, the BRVM, net income, agro-allied company producing rubber and all of that. Let's get Joshua Debisi to weigh in very quickly and briefly on the banking earnings. We haven't seen numbers from the big banks, and I'm getting a bit worried about why these big banks are yet to report. Zenith, UBA, Access as well.
Well, I think it's not really yet time to panic. Obviously, we were waiting and expecting numbers to come in. So far, only Stanbic has really released anything. And, based on their Q3, they had another strong quarter. This year has been quite good for them. They're up to 66 billion in profit already, which is higher than every year except 2019. Total full year profits. So they've done quite well, and the expectation is still that all these other banks that have yet to release, FCB already gave us prior warning that they would be a little bit late because the CBN was auditing their banking subsidiary, but we didn't really get that much indication from all the other banks. But the expectation is that hopefully within the coming weeks we'll see the results, and I'll be able to give us some full analysis on them. But overall, the expectations, I think, across the board, based on the fact that the economy was, definitely reopened throughout Q3, and we saw quite a lot of economic activity, and there's a lot of optimism on the back of the H1 results, which really has been what has driven the Nigerian equity space so far into the green. We're up 13.7% this year. I think a lot of people at the start of Q2 were not expecting that at all. But we've seen, even your oil and gas, even your consumer goods, all of them, investors have really piled into that market, although there might be some other factors that really, played a role in driving so much liquidity into the market. We've seen figures of over 10 billion consistently, or in terms of value traded in the markets, and this mostly is coming from the fixed income market, with a lot of maturities coming through that investors are not really able to reinvest or deploy back into the market, either because of restrictions from the CBN or because of the fact that the rates and yields have dropped so low. They're currently trading at close to 0% levels, and there's even fear in the market that we might see negative interest rates, negative yields, if things continue in this direction. So that's why the Nigerian equity space has really been positive, but at the same time, there's really not that much risk because the economy has really weathered the storm. I think at least that's what we believe, and that's what the investors believe. So I think it's not too much of a worry. But if November should draw to a close and we still haven't seen these results from the banks, then we can start to panic.
Okay, let's keep it hanging there, hoping we will get in as much as possible. But some folks say the FX is still the big elephant in the room for the Nigerian market space in terms of investors wanting to exit and a whole lot of that. Give us a minute, Joshua. We'll touch on that very quickly. Let's move to Southern Africa and look into this market where the currency had a very positive, the market had a very positive Tuesday in terms of the currency, the rand on the dollar. Then the GSE also climbed about 1.8%. Very positive a trading day. Some of the story around the Southern African space relates to what the Anglo Gold is talking about, doubling dividend payment for investors because of the rally that we saw in gold prices in the so far in the year to date, or from last year. We've seen gold prices rallying about 40% or 44% by some estimates. So the gold price has been a good story here for South Africa. We also saw the country's PMI a few days ago in very positive territory as well. Now, if you cross quickly to the North African market, Egyptian PMI moved up to 51.4 against 50.4 in September. The Development Bank of Egypt is getting about $15 million loan from the Green Growth Fund. Morocco's Agri-Bank launched a new subsidiary. So it looks like the market there is heading for a good time. But let me ask Ali very quickly that the Banque Misr is heading to Kenya.
Yes, I think it's one of the strategies that most African, North African banks have. This is to expand in Africa. So we had this case with Attijari Wafa Bank in Morocco. They expand a lot in West Africa, so in Ivory Coast and most of West African countries. And you have also Banque Misr. It will be more on East Africa and perhaps Southern Africa. The main difference is that Morocco is more focused on French-speaking country, and Egypt is more focused on English-speaking country. The only issue is that they need capital. And for that, I think Gulf countries will assist them and will support them for this expansion. So all these Egyptian banks, we had first Abu Dhabi Bank wanted to enter to Egypt. I think this is not the end of the story. It's just the beginning of the story of all these Gulf banks wanted to enter into the African market through North Africa.
Okay, let me ask Ali Khan about this crossing the Sahara for North African banks entering into, we saw Morocco moving all the way down into West Africa, really interested in doing business. Then you find the Egyptian market, Egyptian bank also getting into Nairobi.
That's right. So just to reiterate what Ali was saying, I think Gulf banks who have the liquidity are encouraging the Moroccan banks and the Egyptian banks to expand in sub-Saharan Africa. We've already had the arrival of one Egyptian bank in Nairobi. That was the one that took a majority stake in Mayfair Bank, which was a smart bit of business because it was a clean balance sheet, a relatively new bank. You weren't having to deal with any legacy issues, or you weren't having to deal with a sizable loan book. So I think that was a smart piece of business. The challenge will be for the other banks is that you have a number of tier 3 banks which are no longer sustainable. The central banker has already spoke about consolidation. And for new market entrants, I think it's important that they avoid all that noise and interference of banks which have a long trading history. This was the challenge EcoBank had when they bought a building society, which they then converted into a bank. So I think that's the way I look at it. Assets are reasonably cheap. Yesterday I saw an announcement that the underperforming loans of the banks are close to $1 trillion shillings. That's nearly $10 billion. So really, if you're on an acquisition path, this is probably the right time to be, putting the foot to the pedal.
Yes. But again, Josh, I'm sure Nigerian banks, news came in 2 days ago that Access Bank of Rwanda is doing agency banking, started its own agency banking in Rwanda as well. So Nigerian banks are also looking at consolidation wherever they can get.
Absolutely, but that's we've already spoken, I think, a little bit about the methodology or the logic or the strategy behind Access Bank's expansion, and we've seen them do agency banking, not so much at home, but definitely I think what they're doing is they're matching the strategy with the market, and so obviously they feel that agency banking is a strong expansion strategy in Rwanda, and so it sort of makes sense in that way.
So talking about the FX situation, Joshua, are the banks finding it difficult? Is this FX liquidity issue still as strong as it were as we enter the final months or weeks of 2020?
Well, I think definitely from an investor perspective, from all the foreign investors, you mentioned briefly that there's a little bit of difficulty with exiting the market. I think investors have found a few very interesting ways to sort of get around that. One of those ways is to invest in Airtel, for example. That's one method to use to exit the market. The problem is obviously the level of liquidity and the amount that you can actually invest in the stock. However, it's still a pretty viable way to exit the market. You buy Airtel in Nigeria, you sell in London. But so I think investors have had to get a little bit more creative like that because the CBN is still not selling, vast amounts of FX at the moment because they know that revenues and inflows have really, really dropped. And that's unfortunately isn't going to change, and we were hoping that we would have a sort of smooth in the US that would sort of, ease investor fear.
Joshua, thank you so much. Joshua Debisi at Vertiva Research. Just a final one very quickly for both Ali Khan and Ali Sega. Whatever happens today, whether we get the final results of the US elections, what should Africa hope for in this election? Ali Sega, let me start with you.
Oof, we can say North Africa, except Egypt, is not really, we can say, involved in the election in any way. In fact, in the US election in any way. For Egypt, it will be a big issue, because there is human rights issue and all these kind of things. We can say that Trump is a friend of Al-Sisi, the president of Egypt. So if Biden wins the election, it will be a big issue for Egypt, in fact, because they will need to reassess their relationship with the US, to reassess the relationship with the Gulf countries. So it will be a big issue. For the rest of North Africa, except Libya, because Libya is also a different issue. Libya, you have civil war. Trump was not really involved in Libya. So we don't know what Biden wants to do in Libya and what Trump wants to do in Libya. But for the rest of Africa, so Morocco, Algeria, and Tunisia, it will not be a big issue for whatever the winner is, in fact.
Okay, thank you so much, Ali, this morning. Ali Khan.
Yes, so I think Kenya is a specific situation, a little bit like Egypt's Al-Sisi. There's a lot of personal chemistry between Kenyatta and Trump. There was this idea that Kenya and the US would sign a bilateral treaty, free trade agreement, and therefore Kenya similarly, I think, has exposure to the Trump administration, a little bit like Al-Sisi. I think for the rest of East Africa, probably Biden will be more advantageous. Politically speaking, Trump, as we've seen in the last few days, has given cover to what I would call as bad democratic behavior in the East African and wider African region. Trump, I think, has been permissive in terms of allowing leaders to essentially misbehave and suppress the democratic voice. And I think that trend will continue. But under Biden, I think you'd see a much more aggressive pro-democracy approach than we currently have.
Thank you so much, Ali Khan. And Joshua, what do you think for West Africa, perhaps for Nigeria?
Well, I think we've seen that President Trump is a bit more accommodating of totalitarian behavior, which obviously means that the US will be a little bit more hesitant to step in if there are any kinds of abuses of the populace or democratic process. And I think, that has been a little bit evident with the fact that the US, to a large extent, did not really weigh in on the unrest that we saw in parts of Nigeria. We heard a little bit from the Democratic candidates, but we didn't really hear, any kind of, strong condemnation from the president himself. So this, in general, should give us a little bit of an idea of going forward what we can expect. Obviously, if Biden comes back in, I think there will be a larger focus on, trying to re-exert that influence, especially on countries like Nigeria, other countries in West Africa that might have some slight issues with, their democracies and with free speech. But if the incumbent stays in power, then we are definitely just going to see a lot more hands off, go about it as you like kind of, approach. And I don't know about you, but I know which I prefer. But we just have to wait and see.
Okay. I guess we need to get back to the television and start watching CNN, whatever you're watching, Fox News, CNN, Bloomberg, whatever everyone is watching today. Let's watch the vote counting and see what happens at the end of the day. Thank you so much, Joshua Odebisi from Vertiva, Alikan Sachu in Nairobi, and Ali Seger in Dubai. Thank you, three of you. We appreciate your being on the program this morning. Let's converge tomorrow and see who wins the U.S. elections if the results are out by tomorrow morning.